The broadcast is now starting. All attendees are in listen-only mode.
We're body and bone, currents of electric surging. Your beautiful soul, it touches me where I am hurting. Oh, 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 set me free. Oh, 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 set me free. Set me free. Set me free. Set me free. We're floating along with every breath we're escalating. Hit me like a gong, in my body reverberating. Oh, 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 set me free. Oh, 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 set me free. Set me free. Set me free. Set me free. Set me free.
All right. Good evening, good afternoon, good morning, everybody. How's everybody doing? That was Set Me Free by Hart Sawyer, good friend and musician. And Set Me Free is the theme for today. Happy birthday, Luke. I didn't realize that. So Set Me Free. That is the theme for today. So welcome, everybody. As promised, we have a spectacular session in store for you tonight. I think you're going to really enjoy this. And I will say, this is all technology. from the new paradigm. And so we're excited about that. And it's going to be piecing together some stuff that you may or may not have seen. Before we get started, I do want to remind everybody that if you're not already a member of the Scans, Forks, and Fibos group on Facebook, you should. It's called Forex, Scans, Forks, Fibos, and Waveology. That's what the header looks like right now. Probably won't look like that next week, but that's what it looks like right now. So if you're not already a member there, if you were here from some other source, please join that group. It's where we discuss and teach and help people learn to trade in the new paradigm of trading. Also, for the self-development side, if not already, you should scoot on over also on Facebook to the group Next Level Seekers. It is one of my principal self-development empowerment junkie sites, which is ever evolving, and you'll get some good conversation and some good insight there. Sometimes the most insightful stuff. It's a lot of traders are in there. And so if you're not yet, I would encourage you to be a part of that group. All right, that's the administrivia for the evening. So with that being said, let me do this. I'm going to switch up presenters twice because I need to get them over into a staff section of the group. So give me one quick second. And so Tim, I'm going to come your way first, I think. And let me see if that moves you. It does. So don't worry about doing anything. And then let me come back now. And let me do this. Give me 1 second, guys. I got to do some stuff in the admin panel that I can't do before the session is live. Okay, so I've done it, and I should have them both over there, and they're good to go. So there we have it.
Check. All right.
Okay, we got you. All right, we got you. All right, so guys, let me introduce you to Clay Taylor and Tim Munsinger, two traders who've been with me a couple years now, and they've been doing some mean work in the classroom, in studying, in their laboratory, and I'm going to turn it over to them now and let them present this session to you. So Clay, it's all yours.
Okay. All right. Cool. Thanks, everybody. We're trying to Frankenstein this with GoToWebinar and Zoom, so Tim and I can do everything together. But anyways, so welcome. Steve asked us. We're very humble to show you guys what we're going to show you guys tonight. It's the culmination of a lot of work. So let's dive right in. Okay. So new paradigm of trading. It's time to walk through the Stargate and become the trader you've always dreamed of becoming. Disclaimer. All right. For full disclosure on trading, income, and associated risks, please visit www.tradingdisclaimers.com. Results are not typical. This presentation is for illustration purposes only. It is possible for you to experience loss and no profit. Past performance is not indicative of future results. This is not a solicitation to invest. Only trade with money you can afford to lose. So I'm going to pause here for a second. Screenshot this, pause the video if you're watching the recording, whatever you need to do in order to read this entire thing. It's very important that you do. All right, so our disclaimer to you. What we are teaching tonight is the culmination of 2+ years of learning, practicing, demoing, failure, success, hundreds of questions, attending dozens of OCRs and live sessions with Steve, a massive volume of trades, acquiring knowledge of system performance, and most importantly, patience. If you don't understand something, don't leave. Stay the entire time and know that there is much more to learn. You can do this too. Okay, so get your pen and your paper ready. All right, so get everything ready. And your popcorn. And hold on tight because we're going to be showing you guys a lot of stuff, okay? So if you don't understand something, it's perfectly okay. Just hold on tight. And Steve, I know you're probably going to ask or monitor the questions and stuff, since I don't know if we can see those. So hold on tight, and here we go. So who are we? We're just like you, okay? And we started in the exact same place you are. We knew nothing about Forex. We didn't know how to trade or anything 2 years ago. And we're just wanting to learn and change our lives using the Forex as our financial vehicle. It is possible to achieve your dreams, but you have to put in the work, and you have to put in the work the right way, okay?
Hey, Clay, thanks for the intro. Hey, my name is Tim. You guys can call me Muncie. Just a little bit about myself. I'm 35 years old. I'm married, just had a 2-month-old, and I'm originally from Ohio here in the States. I started my Forex journey in 2017, June. I traded the old paradigm for 3 months, and then soon there I found Steve on IML TV, where I started learning pitchforks and scans. Then I joined Shredder FX and Tab 29, and since then I've continued to persist without exception, just continually, almost every day on the charts, just trying to get as much as I can to build the technicals and the head game for trading. And so this is kind of the culmination of what we've been learning, what we can show in a short period of time.
Cool. My name is Clay Taylor, or Clay Waveology, depending on what you want to call me. 25 years old. I live in Oklahoma City, Oklahoma, in the United States. Started my Forex journey in June 2017, about the same time Tim did, and traded in the old paradigm for about 4 months. Found Steve on IML TV in September 2017 and began to learn how to trade scans and pitchforks. I joined the Shredder FX program and Pip Club in December 2017, and I progressed through the levels and reached Tab 29 in May of 2018, actually 1 year ago yesterday.
So here's just a fun little icebreaker, right? You know, what my friends think I do, you know, throw around money. What my mom thinks I do, at least I would think, you know, she thinks maybe I'm a gambler. What society thinks, right? Sitting in an office with money. What the market thinks I do. What I think I do, you know, I sit behind 6 monitors trading, but what I actually do, sitting there, right? Just sitting there looking at a monitor. But what do we really do, guys? So, you know, we work with scans, forks, Fibos, waveology, right, which is harmonic wave convergence. Power 62, this is really the backbone to how we trade, how we see waveology and price movement, and use that combined with, you know, our INS 2.0 that Steve just came out, which added the support and resistance scan lines. You know, we work with divergence in price and an indicator. We look at trend lines in price and an indicator. You know, our signature move right there is the Clay Way. Also, we're part of the Tab 29 group. We use that for support. And you can see Steve if you guys are interested in Tab 29. And then one of the most important parts is our daily self-development, you know, reading our books, and also dialing on Steve's Mindset Mastery podcast. It's really good. And what do we all do? We do all of it, right? It's a culmination of everything that we've learned over time and we utilize to trap trades. But before we get to any indicators, guys, you must understand this reality about price. The reality is price moves around the 62 exponential moving average, the EMA. I'll say it again, price moves around the 62 exponential moving average. So this is critical to understand. So let's recap a little bit. So Steve posted a video on this past Friday on the HTATF. So it's harmonic targets on any time frame. He put in a lot of knowledge into this video. It was a culmination of the 16 years of him trading and him learning the 62 reality. So if you haven't watched the training video, I'm going to recommend that you guys, after this video, go find that in the Scans, Forks, and Fibos group. And and watch that this weekend, and then maybe come and watch this video after the recording drops. It's really important to kind of understand that. So if you've already watched that video, it's going to help you build some understanding as we continue. So just a quick recap about what Steve mentioned, and I'll just be real brief about it, is the Rob Booker's 51362. So when the 5 EMA crosses the 13, okay, and the 13 crosses the 62, you know, there's a higher probability that the trend has developed, a new trend has developed. So basically what you need to understand is that price moves around the 62 EMA, okay? We're just going to leave it at that and we'll continue on. So here is an example of a 30-minute chart, okay? Just so you understand, here in green, you know, this line here, that's the 5-minute EMA, or that's the 5 EMA. In yellow, we've got the 13, okay? You can see the yellow line right here. And then in aqua, we have the 62 EMA. And that's per time period, so the colors may change, but for a 30-minute chart, we have aqua is the 62 EMA. Okay, so one thing to know if you've watched the HT-ATF video, you'll know whenever the 5 EMA crosses a 13 and the 13 crosses a 62 EMA, we typically have a trend and usually an impulsive move. So in this particular case, we see an impulsive move. Price then retraces up. It comes close. It actually passes the 62 EMA, comes down. We got a pass and check off the 62 EMA, and then we have a continued trend down. So just understand that price moves down. It retraces around the 62, and this is the 30-minute time frame level. So now we'll go look at another time frame, looking at 15 minutes here, guys. So on the 15-minute, we'll do the same thing. You got the 5 crossing the 13 crosses 62, and you see an impulsive move up in price. It does the same thing when it comes up to the top. Price reverses. 5 crosses the 13. We have another 1362 cross, and we have another move down. Okay. Look at another example. So here is a 5-minute chart. Again, we've got the 5, 13, 62 cross here. We've got the 13 and 62 cross, and then price, I mean, we kind of goes down here in this 62, but for the most part, it stays on this side of the 62 until the 13 and the 62 cross here again, right? So what to kind of understand for what I've just shown is that everything in the new paradigm is fractal, meaning it can be used at any time frame. So from the daily all the way down to the 1 minute, you're able to use this technology. And that's why Steve developed the harmonic targets on any time frame, so that we're able to see this at any time frame. And so we're really grateful for him for doing that and putting that together. So we'll continue on here, and we'll hand it back over to Clay.
Cool. So thanks, Tim. So what we're going to kind of do and structure this is we're going to start to piece this, take this one piece at a time and slowly build on it, so you guys see how we go about this. And at the very end, we're going to show it all together. Okay. So the second part of this is, what is a harmonic wave convergence? And Steve, feel free to chime in. Harmonic wave convergence is multiple time frame wave exhaustion synchronization. The indicators FAST33 and tab29 measure the precision and timing of multiple time period wave exhaustions, and when they are synchronized is the precise moment you have a reversal at a given time period. Saw that on a Facebook quote, just saying. So what does that mean? That's okay. So we want to show you guys what this means. All right, so what does a harmonic wave convergence actually look like? So pay really close attention here, okay? So let me see if this is going to cooperate. All right, so we have a move down right here, okay? And so let me just break down this chart really fast for you guys. Okay, so right here we have, we'll just start right here. Right here we have this white wave right here, which is the 1 minute wave, okay? The next wave, we have a purple wave right here. This purple wave right here, that is your 5 minute wave. This gold yellow looking wave right here is your 10. The orange, let me grab the orange. The orange wave right here is your 15. All right. And then finally, your aqua blue line is your 30. Okay, so those are different waves. Those are different time frame waves, all being measured at the same exact time in one single indicator. Okay, that's what makes this so powerful. All right, so keep following. So these colors are standardized for each individual time frame. Okay, so 30-minute, you're going to have a 30-minute blue 62 EMA. All right, on a 5-minute, your EMA is going to be purple, your 62. So we'll get to that in just a second. So back to the harmonic wave convergence. So what we see here is we see price moving down, and we can see these lower time frame waves right here. Okay, lower time frame waves cycling, working really hard, cycling this higher time frame wave, the 30-minute wave, down into the extreme. Okay, so what this means is when these waves eventually meet up, move on down, at this precise moment in time right there, you have a reversal. Okay, so when these waves exhaust right here at this specific moment in time, tab 29 confirms with all green bars and the waves at extreme, and it's time to reverse. So we'll just watch that happen in real time. All right, so we have price moving down. The waves are cycling, going up and down, up and down. The waves are cycling. All right, we can see the 30-minute getting pushed down into the extreme, and then right there, boom, we have a harmonic wave convergence, and tab 29 tells us it's time to turn around, and you can just watch as price turns and goes the other way. All right, so that is what we call a 30-minute harmonic wave convergence because it was involving the 30-minute wave right here. Okay, but as you can see, price comes down, all the waves exhaust together, and it reversed out. All right, so here's just another example on another pair so you can guys get a better picture here. So we're going to build on what Tim was talking about. You have your 513 cross right up here. It's real hard to see. The green wave and the yellow wave, 513 cross, and then the 1362 cross on your 1 minute time frame. This is a 1 minute chart. All right, on your 1 minute time frame. So you have a 1 minute 1362 cross. Price becomes impulsive on the 1 minute scale, on the 1 minute time frame. The 1, 15, and 30 wave cycle down to where they all meet up together at one specific point in time, which is measured in tab 29 and fast 33 at a specific point in time. And when those waves meet, you have something called a harmonic wave convergence where it moves out. And right after the harmonic wave convergence, you get a 513 cross and then a 1362 cross on your 1 minute chart. Okay, so you can see it comes down, harmonic wave convergence, reverses out. Okay, so hopefully that you guys get a better understanding of what a harmonic wave convergence looks like. So just so you guys are aware, nothing in the Forex is random. Fibonacci absolutely rules the charts, but it also rules our everyday lives. Okay, Fibonacci's in everything from art to our faces to planets to our DNA to our buildings. Okay, it is in everything. All right, and so there's no question about it. So the whole objective is to learn how to identify it and chart it on your charts so we can then use what we know about the 62 and harmonic wave convergence to help pinpoint turnaround points.
All right, so with Fibonacci, we're really just talking retracements, right? The simple thing is for Fibonacci is retracements. So what are retracements and how can we measure them? A retracement is a temporary reversal, usually occurring after a harmonic wave convergence, which we just went over. This can be identified using tools that identify the DNA of the market, aka Fibonacci, how price moves. So a retracement can in fact be a reversal, but more on that later. Don't let this confuse you guys. We'll draw this out so you guys can understand. So here we're looking at a 480 chart. All right, 480 chart here.
240.
Or sorry, 240 chart. And this gold is the 8-hour wave, and in green we have a 4-hour wave. So you can see we had a harmonic wave convergence down here, an 8-hour. Price comes up, we have a move up, and then we can put on a Fibbo retracement from this swing low to swing high to see this retracement, what value it would stop at. In this particular example, 61.8, right? 61.8 retracement, and then price continues to go up after we had that 8-hour convergence. So that's just an example of what a retracement would be on a higher time frame. So now, since we did a review on the 5/13/62, quick review, and you've watched the Steve's HTATF video, right? We discussed harmonic wave convergence, just touched a little bit on Fibonacci. So now we've got a special guest with trend lines, right? Let's try marrying these tools together on the charts. So here we've got a 5-minute chart. Okay, we've got a move down. You can see from tab 29, we talked about the aqua being the 30-minute. So we got a 30-minute extreme. So we have a 30-minute harmonic wave convergence at the top. Okay. We have the 5 crossing the 13 right here. We have the 13 crossing the 62. Now you can see through an indicator as price is moving down, you can see that the 5-minute wave is cycling down the 15, the 10, and the 30-minute wave down, right? Two extremes. So we have a 30-minute harmonic wave convergence down at the bottom, down here. So then we can measure a Fibbo retracement from this point down to see what value may turn price. And so at this given point, we are about a pip shy from the 38.2 Fibbo, right at the 62, the 5-minute 62 EMA at a 5-minute retrace extreme. So we'll go over retrace extremes here shortly. But there is a 5-minute retrace extreme. And then as you can see, we can also throw on a trend line for additional tools and support resistance. And then on third touch on a trend line, those are tradable as well. Trying to get these lined up the best I can. So as you can see, we've got one hit here, we've got 2 hits here, and then we've got a third hit. And if you come down here, you can also see a Bollinger Band hit, which is a clayway trade, which we'll discuss further. So it's just an example of how we could have trapped price around the 62 EMA at a retrace extreme. So we'll go into another example next. So here's another 5-minute move, also another 30-minute harmonic wave convergence. So you can see that here in tab 29. We've got a 30-minute harmonic wave convergence at the top. We've got a 513 cross here, I believe. Yep, 513 cross there. We have the 13 and 62 cross. You can really see now here in Fast 33 and tab 29 that the 5-minute wave is cycling down the 15-minute wave, which also the 30-minute wave is coming down to extreme. And you also can notice there are 5-minute retrace extremes here hitting Bollinger Bands, and we'll go over further on that as well. There's quite a few hits on this move down. But you can also, and so price comes down, right? We can put a Fibbo retracement from that swing high to swing low after the 30-minute harmonic wave convergence. Price comes up right to the 38.2% Fibbo again at the 62 EMA, and price reverses and comes down again. And then we had a 5-minute retrace extreme, and we're going down to another 30-minute harmonic wave convergence at the bottom right down here. So another thing that we could do is, you may be able to see it yourself, but we can also place trend lines in price from the convergence. You can put a trend line here, and then we put one down an indicator as well. Okay, and so let me circle these so you can see them a little better. So we've got one hit here, 2 hits up to 62, and then there's a third hit right here. And so that third hit, actually I'm trying to think, yeah, third hit, then that could be tradable as well, third hit. And then in indicator, we've got one hit here, another, and then I'd say this hit right here for this potential move off the 13 EMA. So just showing you guys additional tools that you can use with trend lines coupled with harmonic wave convergence and the power of the 5, 13, and 62. So let's go look at another example.
One thing that we mentioned, and that was a good example of where the 62 we call the rolling Fibonacci, just for these reasons, because very often the retraces come back, and because it's market turnover points, so you very often see it at the 38 and the 61.8, because those are natural market turnovers, and that's why the 62, above all other moving averages, just directly coincides with market turnover, and that's why it's much stronger than any other moving average that's out there. So because it's always, not always, but most of the time involved in these moves, that you'll be able to see that it's almost 38%. If you look at the move from Tim's 38.2 to the very low and then measure up, you can see that interference there, that consolidation is probably right around, is right around 38.2. And if you note then from that high, where all those candles are down, okay, from the low, from the extreme low back to the high and then down, you're going to see probably 38.2 right at the 62. So again, right in the middle of that, Tim, where the 62 is.
Okay. Yeah.
So, you're always going to see these relationships where the retracement and the consideration for market turnover and whatever wave is there on the time period you're at, you'll be able to just see 38.2, 61.8, 38.2, 61.8 is always going to fall, not always, but almost all the time, is always going to fall right on the 62. That's why we gave it that nickname, the rolling 62. The 62 is the rolling Fibonacci. Get it right yet. All right. Sorry for the interruption.
Okay. Thanks, Steve. So here is another example on a 30-minute chart. Okay. And we talked about 240 convergences before. Well, here's a 240 convergence, right? We got the green wave or 240 wave is at an extreme. And then you can see we've got a point up here, a 30-minute harmonic wave convergence, okay? So then you can see the 5, 13, 62 reality. So we've got to cross the 5 and 13. We've got to cross the 13 and 62, and we've got to move down, right? You can see we've got another 30-minute harmonic wave convergence down here at the bottom. And on one thing to mention too is while that price is moving, you can see the green wave, the 240 wave was starting to move down up to this point, right? So then you see in price, you see a retracement up to the 62 at a 44.1 Fibo. It's one of Steve's special Fibo values. And so you see price there, come up there, interact with the 62, come back down, and you see a 240 convergence. So in this particular example, you actually see the 30-minute wave cycling down the 240 wave as the 240 wave goes down to extreme. So the next, and then Clay will talk further about the retrace extremes that we were just mentioned earlier.
Cool. So yeah, Tim drew a few retrace extremes there on his chart. So a retrace extreme is where the subwave, let me grab it to go here. It's where the subwave, which is the current time frame wave. So this can be the 30-minute cycling down the 240. This could be the 5-minute cycling the 15. This could be whatever. It's the subwave, which is the current time frame wave, going to extreme while cycling the primary wave from one harmonic wave convergence to another harmonic wave convergence. Okay, so an extreme is defined as one of two things: the static extreme, which is the 89 or 11, which we can see in tab 29 and fast 33, or Bollinger Bands, aka the rolling extremes. Okay. So how can we capture retrace extremes? So on a 5-minute chart, we can use something called Bollinger Bands. Essentially, when the 5-minute, which is the purple wave, crosses a Bollinger Band or goes to the static 8911 in the indicator, and the waves are cycling, we have something called a retrace extreme, also known as the Clayway. So if you have not watched the Clayway training video, go to the Forex, Scans, Forex, Fibos, and Waveology Facebook group, go to the Files tab, the DisruptiveTraders-TV archives.pdf, and go to the April 8th video where I go over that in way more depth. So if you're getting lost now, guess what, guys? It's okay. It's okay. All right. This is the result of a lot of chart time and a lot of study. Okay. Take these in chunks. If you don't understand something, always come back, research it, watch the training videos. It's okay. We know exactly how you feel with regards to being lost. We were there too. 2 years ago, Tim and I did not know even how to trade. 2 years ago, we didn't know how to trade at all. Okay. So stick with us. Okay. So just as a quick refresher, let's just do a couple Clayway trades. All right. So I'm going to break this down going from left to right. So on the left here, we have our 30-minute chart, we have our 5-minute chart, and we have our 1-minute chart, okay? In the green right here, as Tim was talking about earlier, we have the 240 wave or the 4-hour wave in green, all right? We have the 30-minute wave, which is this aqua blue, cycling the 240 wave down, okay? So let's jump over into the middle right here. In orange, we have our 15-minute wave, which is cycling the 30-minute wave, okay? And then we have our purple wave here. It's right here, is cycling the 15-minute wave. All right, and then we can jump on over here to the 1 real fast, and this 1-minute wave is cycling the 5-minute wave. And you can see over here on my 1-minute chart, this orange wave right here is the exact same wave as this wave right here. And this blue wave over here is the exact same blue wave as this one. So we're able to analyze multiple time frames right here in just a couple of sections on the chart. All right, super, super, super powerful. So anyways, let's dive right in. So we have our 240 wave being cycled down. We have on our 30-minute chart, we have a 5-13-62 cross, or a 13 cross, and then we have our 1362 cross on the 30-minute level. As a result of that, we have a strong impulsive move out. Okay, so what I'm trying to say is, what we're going to show you is, if you miss this right here, this 30-minute convergence, don't fret. Guess what? You can jump in on the smaller time frames that are cycling the 30-minute down. So we see an impulsive move down right here. Let's jump over here. Up top, you can kind of see it here in the corner. You have a 5-13 cross right up here, and then you have a 1362 cross here on my 5-minute EMA. So now we have a 5-1362 cross on the 30 and a 5-1362 cross down on the 5. Okay. So we see price moving down, cycling, retrace, impulse, retrace, impulse, retrace, impulse, retrace. Okay, we can see that in Fast 33. So let me break this down. All right, on a Clayway trade, what we mean is this: when the 5-minute is cycling the 15-minute, like we can see down here, we see the 5-minute come up and touch or intersect with a Bollinger Band. Okay, this Bollinger Band, not to go too in depth with the Clayway, is called the rolling extreme. So if the 5-minute wave hits this right here, it's the equivalent of this wave going all the way up here. Okay, it's the equivalent of that, but it actually stops short right here on this Bollinger Band. So what happens is this: we get a 5-minute Bollinger Band hit. We know the direction of the higher time frame. We know the direction of our current time frame. So we see this right here. Now let's go zoom in on the 1-minute chart. And here it is right here. So we have a Bollinger Band hit, okay, and then our 1-minute wave in white is cycling the 5, goes to extreme, and we get red trend bars right here on tab 29. Tab 29 says it's time to turn around, it's time to go, and as you can see, price turns around. and goes and ends the retrace and starts going the other way. All right, so price comes and cycles some more. We're short here of the Bollinger Band. That's okay. I'm not worried about it. So price comes down, cycles back up. We're still an impulsive side. We're still on the impulsive side of the overall. Price comes up and hits the Bollinger Band again right here. So let's zoom back in to the 1. Sure enough, peak 1 goes to extreme. Red trim bar is telling us tabs 29 saying, all right, it's time to turn around, and price turns around. Price does more impulsive side, retrace, but this one is pretty special, and this is why I wanted to include this one. Tim drew trend lines earlier. You can draw trend lines, so after the first and second hit, any hit after that is tradable off a 2-pip bounce, so you don't even have to wait for the trend bars to flip. So this just added even more confirmation, but also you can see right here the 5-minute wave cycles all the way to the static extreme and hits the Bollinger Band and hits the trend line. So let's zoom in right here. Red trim bars. I didn't draw this one super crazy good, but red trim bars right here. Time to reverse. So you can start to see the power once we go from our 30 to our 5 to our 1, and where we're just going from time frame to time frame, where we're zooming in. Okay, so we're looking at our higher time frames. We're looking at our retraces to get in on the impulsive side. We know where the impulsive side is. And then we're using our 1 minute to enter the trade with hyper precision. Also, wanted to point out just real fast, you can see the 15-minute wave right here in orange. It's actually divergent. So another strong indication of what's going on. So that is essentially the Clayway in a nutshell. Here's just another quick example, 30-minute chart. All right, we have a 240 convergence right here. We have a 513 cross, but our 13 hasn't even crossed the 62 yet. That's okay. We see the impulsive side from a harmonic wave convergence. We assume that impulsivity has flipped. We see price coming down. We see price going the other way after a harmonic wave convergence right here at the bottom. Okay, so we assume it's flipped. So now we're trading on the impulsive side. That's fine. So we have the 5-minute wave cycling the 15-minute wave up, which is cycling the 30-minute wave up, which is cycling the 240-minute wave up. Okay, in this cycling process, we see the 15-minute go to extreme, and the 5 reaches down to continue to cycle it up, but it tags a Bollinger Band right here. Okay, so we zoom in on it, and we, lo and behold, we can see our 15-minute wave going up into extreme. We see our 30-minute wave right here. Okay, we see that going up into extreme, and peak 1, which is our 1-minute wave, is reaching out. We get green bars. It's time to turn around. Okay, we also have a 513 cross and a 1362 cross on the 1 minute. So now you have all crosses in your direction minus the 30-minute, but that eventually happened. So that's just another Clayway example. And then last but not least, we can see up here at the top, we have 30-minute convergence. We have a 513 cross right here, a 1362 cross right here on the 30-minute level. So price is making an impulsive move down, comes down, retraces back to the 62, which is a harmonic wave convergence, and then we have a strong impulsive move down. Again, a 513.62 cross right here on the 5-minute level. We see, again, the purple wave cycling, it reaches out to the Bollinger Band, reaches out to the Bollinger, which is an indication of a retrace extreme. We go zoom in on the 1 minute, and sure enough, there it is. Peak 1 is at extreme with red trim bars. It's time to reverse. So we're in the direction of overall on the 5 minute, and again, 513.62 cross on the 1, 1362 cross on the, 1362 cross on the 1. So all time frames are showing which direction. We actually get another cross right here, but this retrace was strong enough to stay on the 5. So, and with that, I think tossing it back to you, Tim.
All right. Thanks, Clay.
Tim, give me a second. Let me interrupt.
Yeah.
So there was a question, and I just want to answer it. So the question was, like in the example where Clay was pointing out the divergence on the retraces. So yes, what he was showing is the retrace was moving to its extreme. In other words, when we say extreme, we're talking about it's finishing its retrace. So take the middle one there with the double candles, the second dotted line. Yeah, that one. The reason it's divergent there is because direction is about to reverse. It's about to end the retracement and go back in the original direction of the impulsivity of the 30-minute wave. So it is correct. Divergence does mark the end of the move in that direction. You just have to understand which time frame you're talking about.
Cool. All right. Here you go, Tim.
Hold on.
All right.
No.
Okay.
No. You're not following. So can you go back to that for a second? I'm sorry to interrupt, but we'll get through this.
Oh, you're good. You're good. It's harder to see, but
So
yeah.
direction of the wave impulsivity, and that's why he started on the 30-minute chart. So the upper level waves are headed down at this point. The 30-minute wave was cycling the 4-hour wave. He jumped over to the 5-minute chart to show you that you can see the same thing there. We're just watching this inside now because we're having the 513 cross at the 5-minute level. So when these waves pull back, they are retracing. They are going against the impulsivity. So we wait for that retracement to end. We're seeing divergence, which says at that time period, the 5-minute wave is about to reverse and head back down. When it goes and heads down, it's going back in the direction of the 30-minute impulsivity. It's not a conflict. It's exactly what you want. It's taking a slingshot or a pullback move. These are slingshot moves. These are pullback moves. It's the end of the retrace, which means impulsivity is about to return. Thank you.
Okay, we good?
Mm-hmm.
All right. All right, so let's continue on then. So you got to think, well, what else can we do to trap harmonic wave convergence and the clay-way trades, right? We showed trend lines. We showed you, with an indicator, confirming harmonic wave convergence. We did some Fibonacci, the 51362. So now we can look and we can trap trades using a traditional and best fit pitchfork, right? So traditional and best fit pitchforks. They bring hyper precision to our entry. And what this is saying is Fast 33 and Tab 29 complement these additional tools because Tab 29 and Fast 33 are just confirmation indicators, guys. They're not there to say this is a trade. Where you go, trap price, go to indicator, confirm it, take the trade if our confirmations are there, right? In addition to that, we've got harmonic scans, guys. Harmonic scans are very powerful, and mostly because they're big, Fibonacci moves on steroids, right? But they also allow us to put places for pitchforks. And so you could do a CDX, where the CD leg with the anchor point attached to the X for a traditional CDX pitchfork. Or we can do an XA, where the XA leg is anchored in black space, right? So we adjust that to either fit with the C point or the D point on the scan. So you can learn more about how to draw pitchforks and scans in later Disruptive Traders sessions, okay? For now, I've just got a good example to show you guys. So you guys might recognize this chart or even maybe this Fibo value, the 41 point or the 44.1. So what I did is I took that example with the 30-minute harmonic wave convergence at top, and this was actually, there was a 240 harmonic wave convergence here. But for this sake, there was a 30-minute harmonic wave convergence, and the overall 62 EMA for 30-minute was right here, if you guys can remember. Okay, and we had a retracement off of that 62 EMA with the 44.1 Fibo. So just keep that in mind, and all I did is I took that same 30-minute chart where we saw the 1362 cross and the impulsive move down. I took that same chart, and all I did is I moved it down the time frame to get a better idea what is going on the 5-minute chart, because I want to see some retrace extremes. I want to catch some clay-way trades, okay? So that being said, I've got a traditional pitchfork here, and what makes it traditional is that I've got it attached to the previous swing high. I got it swing low and then to another swing high, okay? And so what it allows is any hits on the outer parallels or the median line, we can trade, right? 2-pip pullback, you can wait for a trend bar flip. but those give opportunities to trade. And so from here, and then we can see we've got a hit here. We've got a 5-minute retrace extreme. And like I said, this is a 30-minute harmonic wave convergence working its way down, right? 30 minutes here in extreme. We have our retrace up. Price comes and hits that 30-minute 62 that I had drawn previous to it. But then you can see where the median line on this pitchfork is, right? You can see that there was a 30-minute harmonic wave convergence, but maybe I didn't catch that. Well, price came back down. We had a convergence here. Price came down. The 15-minute wave got cycled down. The 5-minute wave came back up, okay, for a clayway trade right here. And as you can see, we get a pullback, or we got price came back and passed and checked right on that median line for that trade. So that just, it gives high precision to our entries using pitchforks with the technology, Fibonacci, and the clayway trades, right? Let's see, did I have a trend line to put in here? Okay, that's what I want. Yeah, we're good here, so we'll move on to the next. All right, here is an example of a best fit pitchfork. So our best fit, so it's in black space, right? So we can move this anchor point up and down as we need to make adjustments on the charts. But what you use is you use a swing high and a swing low, having our pitchfork pointing up. And to confirm a best fit, you want to have at least, I believe, 2 hits. So we've got a hit here on the lower parallel, another hit. What really confirmed this pitchfork for me was this hit right here, right on the median line, and then we get an impulsive move. And what we could see in tab 29 is we actually have a 30-minute harmonic wave convergence, right? And in this same move, we've got the 5-13 cross right after that. We've got a 13 cross into 62, and we've got an impulsive move down. We end up with another 30-minute harmonic wave convergence on the bottom. Price comes up and retraces 76.4% for a to the pip hit on our best fit pitchfork on the lower parallel, right? 2 pip pullback, we could have a trade, and this happened to be another 30-minute harmonic wave convergence, which was just a retracement of this wave right here, guys. And then we ended up with an impulsive move down. So just the power of what you could use using traditional and best fit pitchforks. All right, so here we got a scan. So I found a 15-minute scan. You know, scans right now are just a little bit difficult to find. Some of the market is just a little bit consolidated in Wiki, but we found a scan, threw it on the charts, and this I believe was a shark. So you got the X, A, B, C, D, right? And so here's a good opportunity to draw a CDX pitchfork, right? So we've got a traditional pitchfork, we've got our anchor point at the X, we got at C, and we got our D. And the same rules applies with the traditional pitchforks, right? When we get a good hit, either on the outer parallels, which we got one here, or median line, or lower parallels, right? Those are all tradable. So we're just trapping price here. So as you can see, at this point here, we actually have a 30-minute harmonic wave convergence that happened at the top of our pitchfork. At that same moment, okay, I've got our HT ATFs here, right? That's what's generating these harmonic targets, because we had the 5-13 or the 1362 cross happened right here, right after our harmonic wave convergence, okay? As soon as we have a harmonic wave convergence, after the 13 and 62 cross, we get our waves here. Our 15 moves down, our 5 cycles it down, right? We've got some retrace extremes going on here in our indicator that we saw for a clayway trade. You can see here is the harmonic 13. So 13 pips from this cross, okay? That already generated from that 1362 cross. We have price came back and retraced, okay? We had our retrace extreme right off our 1362, boom. That's an easy clayway trade right there, right off the 13 EMA. Okay. So there was one good trade there that we saw with the use of the HTATFs and seeing the harmonic targets on the charts. Then the reality with the median line is still there from this traditional pitchfork that we've got from our scan. So we've got another additional hit here and another additional hit here as well. That could be potential trades right off the median line of our pitchfork. In addition to that, we can also put trend lines. We can do trend lines in price and indicator. So if you see something that has a trend, you're more than happy just to go and put that on there, right? So you could see we've got one hit here, another hit, there's a second, and then here's our third hit, and we see an impulsive move down.
And it's a clayway.
And it's a clayway trade. So we're just stacking our probabilities, guys. And then we can also see a trend line and indicator if you needed additional confirmations on these trades for that third touch. You've got it right here. And then in addition to that, we have a nice retrace extreme. I like it when they go a little bit higher, but this one was our third touch on our trend line from here down. And that was a nice move that continued on this 30-minute snake. So which happened to be, must have been a higher time frame move. So, and then our big point though is we want to combine all of these tools that we've been going over, the tools that we've got in our bag, the tools that we've learned and we work with daily and on charts that we, that's why we post pitchforks. That's why we post our trades, to get some critiques, to get review. It took a volume of trades to learn these tools and to build the head game in order to get some mastery on the charts. And so we're just showing you guys what we do and show you numerous times on how you could trap these clayway trades. And so I'm going to leave it up to you, Clay, for the next one here.
Cool. So you're good. All right. So let's go to the charts now and look at a live example. So we have a scan right here on the CAD JPY from forexharmonicpatterns.com. So what I did is I went ahead and preemptively put this on my charts right here on the 30-minute level. Okay, so we're going to build this out on a live chart, so it's not just screenshots. So here is that same exact scan that we had earlier. Okay, so we're going to build this out. So I'm going to grab my pitchfork tool and I'm going to look and I'm going to say, okay, this probably isn't the best time to be drawing a CDX fork. Why? Because price isn't really in it. So that's okay. So what I'm going to do is I'm going to draw an XA best fit pitchfork using the XA swing. So I'm going to come down here to my swing low, come up here to my swing high, and I'm going to adjust my pitchfork to line up with either the C, which if I did it there, it would shoot straight into the dirt, or I'll line up my median here with the D. So I line up my...
Expand that out a little bit so you can see a little better.
Yeah, hold on a second. And so I expand it out right there. Okay, cool. So I line up my median right here. Let me grab this with the D. And now I can look and see, okay, price kind of travels along and then I get a tag here. But what if, we have a 30-minute harmonic wave convergence up here, but price actually moves past it just a little bit. So what I'm going to do is I'm going to start stacking my probabilities on this potential trade, because as price moves along and it's cycling the 240 down, I want to make sure that I have my traps in place to be able to capture this. So I'm going to take a retrace, a Fibonacci retrace. I'm going to draw it from my X to my A, which is a fork Fibo. All right. And as we can see, price comes along, actually kind of ekes out of the fork, and we can see the 50% line right here. Now, the 50% isn't a Fibo number, but it is the halfway point between this point and this point. Okay, so we have a 50% hit right here, and let me zoom in a little bit more. As price comes back out from a harmonic wave convergence, it actually comes down, tags the 62, comes back up, checks the parallel right here off this fork. So now our fork is validated right here. We have a median hit and a parallel hit. All right, and we can just see price explode off on down. Now, price moves off. We have a 513.62 cross. We actually have a gap right here. And then price comes on down, leaves the fork, and actually hits a, I think this is a 1.1 or 414, I think, Fibo number. Anyways, that's kind of advanced. You can check that out in the Pitchfork course and on Pitchfork Disruptive Traders. Anyways, price comes down here, bounces back into the fork. We get a little cross right here, a little retrace, you get another cross up, and then this is where it gets interesting. So we're still on a 30-minute level. You have to remember that. Still on a 30-minute level. It's a 30-minute Pitchfork, 30-minute scan. So we get a harmonic wave convergence right up here off the quad, off this fork. You see, it's actually right here. All right. Quad off this fork. So price is now on its way down and get our 1362 cross, but fret not. It's okay if we miss this, because now we're going to say, all right, now we have an impulsive move on its way down. We have our cross coming all the way down, okay? It's cycling this 240 down. We have our cross down, and so we're just going to say, okay, we're going to take this move right here, and we're going to go look at it on the 5-minute chart. All right, so I'm going to expand my 5-minute chart now. And up here, you'll have your, I believe, let me just do this real fast. Let me just sync this. Oops. Sorry about that. All right, so here's our 30-minute harmonic wave convergence. You can't see it in Fast 33, but it's to the pip, okay? Just show you the power of scans and forks. On our 5-minute level, we have a 513 cross, a 1362 cross. We know from our 30-minute over here, the impulsivity is down, right? Now we can see it's down on our 5-minute level. So what we're going to start doing is we're going to start waiting for the clayway trades. We're going to start trying to trap clayway trades as this cycles down, okay? And you can see it right here. You can see several examples. So let me just mark them up for you, okay? We can see the cycling process down. 1, 2, 3, missed that one. 4, and then it gets wiki, and then maybe 5 right there, okay? So all we have to do is start doing this right here. We can take Fibonacci, we can take our trend line tools. Let me grab my trend line tool. I can say, okay, I'm gonna draw a trend line from there to there, and boom, here's point 1, here's point 2, point 3, it's right there, point 4 even, and then price takes off. Okay, and we can see as price moves down, it's interacting with the fork lines, and it continues on down. Get rid of that, and it comes all the way down to our lower parallel of that 30-minute XA fork. All right, so we can use trend lines, we can use Fibonacci, we can use even trend lines at price. Let me see if I can draw one. I gotta use the trend line tool. And let me just use this. I can maybe, and nothing real good. Well, hold on. There we go. So you can draw trend lines and price here on the 5-minute chart. All right. So if you look, 1, 2, 3. So we would have missed that there because I think it actually came short of the Bollinger Band, but it ended up being a trend line hit in the indicator. So that's still valid. So all I'm doing, guys, is I know where impulsivity is. I know where things are going, right? Because I can see it on the higher time frame. I'm not trying to stop this in its tracks. It's like trying to stop a freight train. All I'm trying to do is ride it with it. I'm trying to go with it. I'm trying to figure out how can I get on the train as it makes its way across. And so price continues on down. So let's zoom out so you guys can see it. And let's just pick, let's pick this one right here. All right, and we will sync it so you guys can see it. So let's back up. We have our 30-minute move over here, and we're right here in the middle of it, which is right here. Let's go look at our 1. Sure enough, Let me line it up real fast. We get our 1 minute
Yeah,
at
you get
extreme.
divergent in peak one too.
Mm-hmm. Divergent there. That's covered more in the clayway. And then red trim bars, price reverses. All right. And then we get a 1-5-13 or 5-13-62 cross right here, and then price gets back below it. And then if you're familiar with POT, you can check out, price comes back up here. Retrace extreme. I won't go too deep into that. But anyways, so that's kind of what we do on a real life example. We start over here. We start at our higher time frame. We don't go straight to that. We don't do that. We come over here and we build our traps and we see what's going on at a higher time frame, and then we zoom in to say, hey, is there anything that I can pick off? Boom, 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 to get me my pips for the day. Is there anything I could pick off that's highly, as a high percentage? Okay. So that's a live example on how we do things, on how I do things. So let's just talk about this, and this will be the last section, Steve.
Hey, Clay, hold on 1 second. So,
What's up?
a couple questions. So the first one is, if doing a clayway trade, how do you alert yourself to the chart without sitting in front of the screen all day?
So you can set alerts on your Bollinger Band like this. You can set an alert on your Bollinger Band. So when this price moves up, all right, price moves up, it crosses the Bollinger Band or tags it, and you can set alerts. Actually, let me see. Yeah. So if you look over here on my right side, I've got alerts for the clayway trade right here. So I've got 2 alerts. One is at the 89 and 11, 2 alerts. So when it crosses this and it crosses this, or when it tags the Bollinger Band on either side of the Bollinger Band, it's hard to see the bottom here, but you can see there. So you can set alerts just like you can with everything else. Set alerts to cross it, and when the 5-minute wave crosses it or tags it, it'll go off.
Okay. Another question. How exactly do we know which pair to use using the scans from the harmonic scanner?
Weren't you going to cover that in more in a 62 course, Steve?
Which scans to use? Which pairs?
Well, I think you can just use the scan that gives use the scan that gives you pips. I mean, look at that. You can't really use it in here, but look what happens. It has an interaction right there, and it's time to start trading it.
Yes.
So set your trap.
What Clay is saying here is he's not trying to catch the D move. He's using the completed scan to show what happens with price afterwards. A lot of traders abandon the scan once they think the D move's done. And what we've been talking about now for, nearly 2 years with Charlie Delta is that the scan has tremendous values, which is why we'll get 2 to 5 trades off a scan when the scan traders walk away, because there's just more as Tim said, the Fibonacci-ness of the scan, and then you combine that with the Fibonacci-ness of a pitchfork, and you have something that is just so loaded with Fibonacci, it's not even crazy. So the value of a scan to us is not so much trying to catch the D trade. That's kind of beginner stuff, and it's, oddly enough, it's the hardest and riskiest stuff to do. That's my boxer. You can do the completed scan and draw forks off of it, just like when Clay said here. He said, look, the CDX doesn't look good. It's too tight. It's pointed up. The move is down. I'll go and try the XA. So he does an XA on a completed scan. So just because the scan is formed and done in terms of the D doesn't mean that the scan isn't useful. So the first thing you can do is literally have, just quickly rotate through the pairs on your chart for the various time periods and see what scans are out there. So that's kind of the best way to talk about that. Is it okay to do these trades using Fast 33 only? If you can get enough information for the time period you're trading, yes. So that's fine. We don't spend a lot of time with 30 minute Bollinger Bands, because what you're doing is reintroducing slush to a system that's designed to eliminate slush. So I'm not saying it can't be done, but you don't have the kind of precision that Clay is going to show you or has been showing you here. So you can, it's just why. Okay. There are so many scans to play with on the Harmonic Scanner site. Pick one and go. So,
Guys, there are pips. There are pips all day long.
Yeah.
All day long, there are pips.
Yep. We prefer to just pick some of the various pairs that have good market movement, that aren't very wicky. You don't want a lot of consolidation, guys. If you see a lot of consolidation like you'd see on the scans now, even at the end of that CJ right here, it's just the market's not going anywhere. The EMAs are going flat. You just walk away and go to another pair. Don't try to put trend lines and things on that. You're just going to mess up your head game. But like personally for us, we like CJ, UCAD, the Euro.
Stuff that moves when we're awake.
Yeah, that's true. That's the point too. Yeah.
So guys, look, they're highlighting some ways. The general focus was clayway, how to have more precision, how to find more clayway trades. Clayway trades are, by definition, 5-minute retrace extreme waves. So they're not trying to catch harmonic wave convergence. They're using harmonic wave convergence to tell them direction of impulsivity, and then they're trading the retracements against that. When the retracement comes and completes its retracement, it goes to retrace extreme. They are then catching that reversal, which puts them back. It's the slingshot move. It's the pullback move. It's just they're doing it with precision. Okay. Let me see. Hold on. There's one or two more here. So as we are stacking up all these probabilities, did breakout prove not to be worth pursuing as an additional probability?
Did breakout?
Not familiar.
I don't know how you measure a breakout. There's numerous ways.
Like Tim said, I guess I wonder if it's in reference to consolidation. I'm not trading in that. I don't even care if that's there right there. That's just too wicky. I don't care if that's there right there. It's just too wicky. Why would I risk my hard-earned capital when something that's, up, down, up, down, up, down, up, down, up, down? I don't want that. I want smooth, predictable, normal conditions. This is no-go.
We talk about wickiness all the time. So if you follow us in our sessions, we talk about why wickiness is not good to play with. It's too much indecision. It's not outright rejection. It's indecision. The red EMA you introduced to fast some time ago. The red EMA. I'm not sure what you're talking about there, Troy. Let me see. Hold on. A couple more. So how many quarters in a dollar? Okay, good question.
Thanks, Mackenzie.
Yeah. How'd you know? Red line for the BBs.
Oh, he's talking about this. Okay, I can show this. So you add the Bollinger Bands, all right, and we cover this in the stats 33.
Yeah.
The basis line, you don't need it. You don't need it. Just toggle it off. It's just distracting.
Yeah. Okay. I think he's talking about late break, not breakout. Late break. Late break is a continuation. It's not that pertinent for Clayway because it doesn't have a level of precision. And remember, late break by definition is a pro-trend old paradigm indicator that we use when we miss harmonic wave convergence. So we'll have a little bit better flavor for use of late break with our wedge trading when we do the course on wedge trading in the next week or two. Hold on, let me get rid of some of these.
Okay, we got one more section after this.
Okay, do shadow bands play any part of your trading?
Absolutely. So
Yeah.
we had a lot to cover. Okay. Shadow bands, I can toggle them on. You can see them, so we can see shadow bands.
Throw them on the 30-minute and see.
Yeah. Hold on a second.
How long do these fellas spend behind the charts on a day? So there's two times you're spending times on the chart, right? You spend times on the chart to trade, You spend time, and that includes demo, to get a volume of demo trades on a particular thing. What they're showing you here is, as they said at the beginning, a culmination of a volume of trades on numerous things. There's volumes of trades on pitchforks. There were volumes of trades on scans. There were volumes of trades on Charlie Delta and X-ray alpha forks. There were volumes of trades with harmonic wave convergence. There were volumes of trades with 513.62 realities. There were volumes of trades with shadow bands. Now, it sounds enormous, but they also, I can tell you these guys have gone from zero to hero in 2 years. You saw their bios when they started. They do spend considerable time when I show them stuff going to the laboratory and looking at it. That's how you MacGyver your way into stuff. And, it's not always that you discover stuff, but when you realize stuff that's been there, that you're shown, and you feel it for yourself, it just, I don't know best how to explain it. It's like finding gold in a pan when you're looking for gold. You get addicted, and you go looking for more of it. And the more you look for it, the more you find it. And the more you find it, the more you look for it. So they spend considerable time in the laboratory so they can find high precise, high probability trades. It also then works with their discipline into not taking crap trades, not taking lottery ticket trades. So they end up, just as I teach, the only trades they're going to take are the ones that are winners. Okay, so I kind of answered that question for you guys, but I know the story there.
That's fine. All right, so just real quick here, we have a shadow band 13 right here on the 30-minute. It actually intersects right here and intersects right here. So those are energy points.
Do you want to tell them about the 34 and the 21 shadow band?
Steve, you want me to tell them that? Well, I think Steve went over that in the...
Yeah, if you planned on it, go ahead. If don't. I know you got a lot of going on.
Let's just keep going.
Yeah, hold on.
We'll keep
I got
going.
one more here I want to clear out. So once again, to go through it step by step, first look at the trend. It should be larger time frame trend. Then look at the 513.62 to see how price is reacting to it. Then look what is going on in tab 29. Then you draw your tools, pitchfork, energy points, and other indicators for hotspots. Then when price is in your hotspot, look at tab or fast or actually Bollinger's for your entry. Yes, that's pretty much the summation. Okay, that ends the question. Thank you.
All right, cool. So we'll jump just real quick on the 34 and 21 shadow bands, what we're talking about there. Steve covers that in the harmonic target all time frame video. So if you want to know what that is, go watch that video. So we're going to jump back over here. All right, so putting pips in the bank. This is kind of the summation of this, but it's I think the most important one. Putting pips in the bank. The statements, what if only I, well, I would have caught this move if those statements do not put pips in the bank. If isn't reality. If is your ego talking. Ego is your greatest enemy when learning, demoing, and even live trading. Putting pips in the bank, continuing. The only reality there are the pips you secure. Don't sacrifice those pips on the altar of ego because you want more. The pips that preserve your head game in your account are the pips that are there every single day. Every day. But you have to bank them. You have to secure them and then you move on. If doesn't exist in your bank account, the money is either in there or it isn't. So your ego wants more. It's going to whisper in your ear and go, oh, a few more won't hurt. When in reality, your ego blinds you, and then you surrender those pips you worked hard for in the first place by setting traps and studying and everything else because your RAS was clouded. Ego is what stands between you and your success in the Forex. Ego is the enemy of what you want and of what you have, of mastering a craft, of real creative insight, of working well with others, of building loyalty and support, of longevity, of repeating and retaining your success. It repulses advantages and opportunities. It's a magnet for enemies and errors. And so how do you fight your ego? Self-development, reading books, Mindset Mastery podcasts by Steve, volumes and volumes and volumes of trades.
In demo.
Posting in groups, affirmations, not affirmations, affirmations, meditation, taking criticism and learning from it, not arguing with the admins, trusting the process, and patience. So lastly, I just want to say here's the disclaimer again, and the end. That's what we got.
Very powerful, tying it all together. Well, you can use the Hall for money management, but we didn't touch on it much here. But the 513.62 is very often when it, our goal is, as Clay said there, is to put pips in the bank and to not fight to try and get more. Okay. And so, go back and watch some of the earlier videos, 5 pips a day, what 5 pips a day is. I saw somebody post today in our Disruptive Traders AI group what, some of the software has opportunities to set a weekly target goal. And some people are learning to put 5% because they can turn it on when the market opens Sunday night, and a lot of them were hitting 5% by Monday noon. And you can turn the software off and just, go about your day. Why don't you go for more? Well, Clay just explained that. Okay. But 5% a day on an account, now I find 5% a week, on an account, what do we talk about for us? 2% into a 10 pip stop loss. So 5 pips a day is 1%. 1% for 5 trading days is 5%. So we're talking about the same thing. And 5% a week in your trading, just 5% a week, doubles your account in 15 weeks. Doubles your account in 15 weeks. Now, I know a lot of you, that's not fast enough, soon enough, big enough. But you've got to get real. If you've never gotten 50% of your account in 15 weeks, if you've not gotten 25% of your account in 15 weeks. Remember what the banks pay you. Remember what, most major investments bring you. They don't bring you that kind of return. So if you can go to the charts and get 5 pips a day or 5% a week in 15 weeks, you've doubled your account. That's incredible. All right. That's just absolutely incredible. Now, Clay's, and Tim finished up there, and I just have to mention this, and I'm not trying to rattle any feathers here, but it's just a good point in history. It's probably a good thing when Tim started that we lived quite a distance apart.
I agree. My ego was horrible. My ego was so horrible.
Tim and I went round and round, and I got to the point with him. I said, I can't work. If you're going to have this ego, of course, the trouble when you have ego is you don't know you have it most of the time. And you sit there and go, why is he saying I have ego? Because I don't have ego. But this is where you have to trust the coaching. You have to trust the people working with you because, as traders who work their way through self-awareness of their own ego, they can start seeing it really fast in others. And so, I worked with Tim pretty extensively at the beginning. And then, it was like, we're not going to do battle anymore because we're both wasting time and we don't need to do it.
Yep.
And Tim, fought his way. The biggest thing why Tim's a trader today is because he persisted. He said, okay, Steve says I got this thing I called ego. I don't see it, but maybe I do. I'm just going to keep pushing. And he kept pushing and he kept pushing and kept pushing until he became more self-aware. And so it was a tremendous turnaround story in 2 years to go from 0 to hero, like I said, to be able to do this kind of analysis on the chart. And so, so I hear Clay laughing and Josh Casey's laughing in the comments. So apparently Tim let others know that I thought he had ego. That jerk Gregor got to yeah. Oh yeah, we knew. Growler saying it. So anyway, it is easy for me to see ego, and I don't mean to pick on people, and I'm not trying to get nitty gritty and personal, but generally I can see it, and I just, you've got to do the work to become self-aware, and that does come through tons of reading. Okay, that he always said nice things about SG. Wink, wink. Funny, Todd. So, we all have ego, guys. You don't conquer. It's not like some disease that you cure. We have ego all the time. You just get better at sensing when it kicks in. That's all. The awareness factor kicks in. But I can't say enough about this presentation. These guys did a superb job. I know, and you can tell from the examples they put forth and the charts that they put forth and tying this all together, this took tremendous time to put together. And they did this no compensation other than to give to you guys, from their hearts, and having reached a certain level of success to give back to the community that they help learn from. So appreciate it is what it, for what it is, especially you guys who aren't in my personal private trading groups, just here in public, as part of Disruptive Traders, regardless of where you've come from. This is a solid effort to put, I said, I think in one of my comments, I said they probably put 20 hours or more, and that's probably a strong underestimate to put a presentation like this together. And not only that, they got it down in 90 minutes, which is shorter than most of my sessions. So they did a superb job here in bringing it all together. Now, if some of this stuff is like, whoa, they did this, and they looked at pulsivity, and they did divergence, and they did convergence, and they did forks and scans, and 51362, and Bollingers, and oh my God, I don't even know what a pip is yet. It's okay. Just get it in your mind that if you set the dedication and the commitment to do it, you can do it, because these guys didn't know what a pip was at one time too, other than a backup singer for Gladys Knight. So they didn't know what a pip was. They didn't know what a Bollinger Band was. They didn't know what harmonic wave convergence was. And it's just a commitment and a volume of trades. And when they say volume of trades, we're talking about demo trades, posting trades, not to win, but to finding out what you don't know by letting others help you and figure out what you do wrong and what you're missing. And then you add that to your repertoire, and you go back and you learn more. But to get the ego and the head game out of trying to win trades up front, there's a time and place where you can say it's time to start winning in my demo trading, but not as you're learning, not as you're progressing through each one of these general areas. So I'll open it up to general questions. Let me see if there's anything here, guys, that are specific. A lot of them are giving you very high compliments. Ego is not your amigo, for sure.
It is the greatest enemy in your life.
People are clapping, people are dancing, people are shouting, lots of compliments. Hold on, come on. Whoop, whoop, super job, very powerful, awesome guys, good insight, great work, guys. I'm sorry for my language, but F amazing. Okay, I love it. Great presentation, learned and relearned a lot of information. Yes, that's it.
We did too.
Yep.
But AI doesn't have ego. That is correct, Mackenzie. AI doesn't have ego. But AI still has to be run by a trader. AI said, I read a bunch of posts, and this is, if you're not interested in AI, don't worry. This is still relevant to you as a trader because it works both ways. I saw several posts where people set their income, their gain for the week at 5%, some at 10%. And then because they achieved it in like 24, 36 hours, they went ahead and upped it to try and get more. And that's exactly what Clay is talking about is, understand a number that you can work with that's real, that's achievable, and that's duplicatable. And just because you did it once in the morning doesn't mean you're going to do it again in the afternoon. Okay, your RAS is fixed on what it is you've done, whether it's win or lose. And remember, if you did watch the Trader's Brain, the physiology movie video the other day, as I recommended, you will recall that when you have extreme happiness or extreme sadness, disappointment, your amygdala gets flooded with hormones, and the amygdala then stops the information, the sensory information that is being sent to it. It stops its ability to be processed. So when you're overly happy or you're overly pissed off about a trade, both of them are danger signs. And this is why, as Clay suggested, a lot of the times you'll make pips and then you go back for more and you'll give up what you earned because you're so happy. I'm not saying cocky or arrogant. You're just so happy that the physiology kicks in. And that's why that video is so important to understand, because you have to understand how your brain works. That's just, pure and simple. And once you understand how your brain works, then you can start looking to be self-aware for ego. Then you can start understanding when you should and should not trade based on its potential impact on your RAS. How do I get Fast 33 tab 29? Send Clay a message.
Hold on, let me find Steve's email real quick.
Yeah, we were talking about that earlier today. Okay, those are all the repeats about ego and Tim. Let me come down here. All right, this is a good question. What is the reason, and don't be afraid to give the answer, what is the reason for having tab 29 on the 30-minute and 1 minute, but fast on the 5?
Here, let me just show why. Because I get this question a lot.
Mm-hmm.
So, let me get rid of the shadow band. So we have fast 33 on the bottom. All right, so I'm going to add tab 29 to it as well. So you can see, so don't really pay too much attention to the price, but you'll look at tab 29 once it loads here. In tab 29, you have you cannot toggle the 30-minute or the 10-minute off, so you have everything jumbled together. And so let me move my hole up real fast so you can see. So hold on, turn off my Bollingers. Okay, so you can see how cluttered tab 29 can be. It's a lot for my RAS to process, even after looking at it for so long. I only wanted to deal with 5-minute retrace extremes. I wanted to see the 15, but I don't need to see the 30 because I can see the 30 on my 1 and I can see the 30 on my 30. So I don't need it on my 5, and so I wanted to keep this as clean as possible. That way when the Bollinger Bands are hit, I can see it clearly. So that's why I run fast 33, but I think that's going to change pretty soon.
Yeah. Okay, set your goal and stick with it. That's what goals are. That's true, Elizabeth. Thank you. Yeah, moving the goalpost is not good. Absolutely. Would Clay only take a Clayway trade with all 3 time frames agreeing on the direction at the same time?
That's a hard question to answer.
For the most part, the 5-minute is retracing, and most of the time it's retracing against the 15. Those are or the 10, depending on which time frame you like to trade. Those are the ideal trades. Is the 5 pulling it back against? He's just showing you that the bigger sense of momentum, the bigger sense of impulsivity, sometimes can be readily seen on the 30, and if you then see it on the 5 or the 15, boom, there you have it. But you can use the 15-minute and the 5-minute in the same way that he's using the 30 and the 5-minute here.
The 30 just gives me more visibility, gives Tim and I more visibility on the 240 and the 30 without having to go to those time frames to see it. We can just see it on the 30-minute chart.
Yep. So it's just a better sense of what's going on. But for the reality, the 5-minute retrace should always go back into the same direction. Otherwise, it's not a retrace, right? So once the retrace expires and exhausts itself, you're returning that. They're slingshot. These are not, the old paradigm. They trade slingshots. A lot of them they would do it just off of a Fibonacci, but a Fibonacci isn't enough confirmation because often a Fibonacci level will fail. What is the stop loss for Clayway trades?
Money management is trader's choice.
Right.
That's where we'll leave it at. Yep.
Guys, if you're interested in what your stop loss should be, pay attention to our sessions because we always talk about the stop loss pretty much is always scaled to the scale that you're operating at.
I will say, though, when we are entering in on the 1, it's not like our stop loss is minus 20. We're in here pretty tight because of the technology that we have available to us and the tools.
Right. Okay. Answered that. Will there be more sessions like today? If Clay and Tim would give up half their week every week, we'd be honored. But this, as I stated, this took a lot of preparation to pull off. And so, there you go. The slingshot is clayweight. I mean, that really is what it is. It's a 5-minute slingshot. Okay, we're just using new paradigm technology to go there. And yeah, we're going to do more sessions like this. Now, for those of you who are greener, who are newer, understand that, Tim and Clay are part of our emerging new coaches, and we're working on a schedule. We've got a rough one done. We're just refining it, and that will go beginner, intermediate, intermediate, advanced at a lot of these levels for scans, for pitchforks, for harmonic wave convergence. So we can move you guys through each of these areas of specialty that when you're through it all, you have the ability to do the stuff that Clay and Tim were doing today. So this is much a demonstration of what can be done as it is, motivational. So you guys get excited about, what can possibly be done. Yeah, I'm extremely proud of these guys. And for you, here's the deal. For those that take my shredder class, they know the story. Many of you don't know the story of Roger Bannister, right? So Roger Bannister was a medical student in England, and he was a track runner. He was not distance, but he was a runner. And he and a lot of other people around the world were trying to break the 4-minute mile. And it couldn't be done. And from the time they started keeping official track records in the early 1900s, it couldn't be done. In 60 years, nobody was able to break the 4-minute mile. In fact, most of the medical community said for a man to break the 4-minute mile, his chest would explode out, his heart would explode outside of his chest because it would just put such duress. And so here are these people running, but nobody could break the 4-minute mile. And finally, in one track meet, Roger Bannister ran a 3:59.54, and he broke the 4-minute mile by 6/100ths of a second. Well, guess what? In about 5 weeks, the second guy to break the 4-minute mile did it. An Australian guy did. And about 5 or 6 weeks later, the third, fourth, and fifth guy to break the 4-minute mile all did it in the same track meet. And the bottom line is 60 years, nobody could do it. And then once they see somebody do it, I guess it is possible, right? So when you have, a credible source, an authority teaching, a lot of times you get much better impact. It resonates more when people see their own peers doing what it is they want to do. So it's the Roger Bannister effect. And so regardless of where you are, trust me, I know these guys' IQ. No matter where you are, you have you have the ability to do this. It's just commitment, dedication, and time, which time is measured by persistence. Okay. Yeah, too many for those to recall the Roger Bannister story. Okay, so nothing but just the credits keep rolling, guys. So again, beautiful mastery job. You guys did a wonderful job, and there they are. I can't thank you.
It's on our way down to Fort Lauderdale.
Yeah, I can't.
Tim put me in the middle seat, and I was crammed.
Hurricane. I wish I missed that so much. But anyway, guys, appreciate you guys so much. Tim and Clay are rising coaches out of a group we have, and they'll support you in like the other coaches will in our Scans, Forks, and Fibos group. The only thing we ask is you don't single them out, because I can tell you it's a curse, not a pleasure, to have hundreds and hundreds of messages a day. So your primary place to ask questions about everything you see in our sessions is in the Scans, Forks, and Fibos group. We have over 25 coaches and admins in there to help you. Because they are located around the globe, it's pretty much the fastest place to go to get a question asked. The slowest place to go is to come to me with a Facebook message and ask, because in addition to the hundreds and hundreds of messages, I'm many hundreds deep in message requests, and I'm lucky to flush that out at least once a week. So I'm always behind on that in email. The fastest place is go right to the Facebook group and ask a question there. And then don't tag anybody. Give it a chance. See if they answer it. If you don't get it answered in 24 hours, then you can tag an admin. Okay? So with that, this session is being recorded. It will be uploaded and put into the Disruptive Traders archives. So hopefully you guys enjoy that. As much I enjoyed it. I enjoyed watching these guys do this presentation. Okay, so I think we're good. Any last comments, Tim or Clay?
Thank you guys for your time. I know it was kind of a nuclear bomb for your RAS, but stick with it, and thanks for letting us teach.
Yeah.
Yep, and thank you guys for those who showed up live and took the time and are still here. We love you guys, appreciate you guys, and thanks for the time you guys carved out.
Absolutely. So as always, I'll sign off. Remember, life can be short and sometimes even shorter than that. So for the people you care and love, let them know you care and love them. I love Tim and Clay for their effort here and all they've done. And I love you guys for being here tonight on a advertised session that was going to be special. And hopefully you did get something special out of it. And maybe now, and maybe as you watch this recording and whatnot, it's a good recording to share with your friends about the possibility of two guys that were non-traders 2 years ago and look where they are just through committing to do it, just saying, I can do it.
Mm-hmm. I was a photographer, and Tim worked in corporate America, so that tells you anything, you can do this.
There you go. All right, guys, let's shut it down. Y'all have a good evening, and we'll see you in Facebook land.